Everyone wants to build wealth, but most people think it is only possible if you have insider knowledge, take big risks, or trade stocks all day long. The truth, you do not need to do any of that. You don't need to predict markets. You don't need to chase the next hot stock. You don't even need to check your portfolio every day. Because there's a simple, proven, and almost foolproof way to build long-term wealth index funds. So what exactly are index funds? Think of them as a basket that holds many different stocks, sometimes hundreds or even thousands, all designed to mirror a specific market index like the S&P 500, the NASDAQ, or the total stock market index. Instead of betting on the single company, you are betting on the overall growth of the market itself. It is like owning a tiny piece of every successful company at once. Let's say you invest in an S&P 500 index fund. That means you automatically own small shares of big companies like Apple, Microsoft, Amazon, Google, and hundreds of others. When these companies grow, your investment grows too. And historically, the S&P 500 has returned an average of about 10% per year over the long term. That's the power of compounding and diversification working together. Now, here's where most people go wrong. They think investing has to be complicated. They believe they need to outsmart the market, time their buys and sells, or pick the next Tesla or Nvidia. But study after study has shown that most active investors, even professional fund managers, fail to beat the market consistently. They spend more time, take more risks, and often earn less. Meanwhile, the patient investor who simply holds index funds keeps winning year after year. Warren Buffett, one of the richest men on earth, said it best. Most investors, both large and small, should just stick with low-cost index funds. And he's right. Because index funds remove emotion, speculation, and complexity from investing. You don't have to guess what's next. You just have to stay consistent. So how can you actually build wealth using index funds? It starts with one simple habit: invest regularly. Set up an automatic investment plan where a fixed amount of money goes into your index fund every month. This strategy is called dollar cost averaging. It means you buy more shares when prices are low and fewer shares when prices are high, automatically balancing your risk over time. Even if you start small, let's say with $100 or $200 a month, that's enough. Because over time, consistency beats intensity. The earlier you start, the bigger your returns will grow thanks to compounding. Let's take an example. If you invest just $200 per month into an index fund earning an average of 10% per year, in 30 years you'd have over $395,000. That's the magic of compounding. Your money starts earning money, and those earnings earn more money. Time is your greatest ally. But here's the key. You must stay invested. The biggest mistake investors make is trying to time the market, selling when things look bad, and buying when they feel safe again. In reality, that emotional reaction destroys returns. If you miss just the 10 best days in the market over the past 20 years, your total return would drop by almost half. So stay the course, no matter what. Now, you might be wondering, which index funds should I buy? It depends on your goals and risk tolerance, but here are a few tried and true options. For U.S. stocks, consider funds like Vanguard's VOO, Schwab's SCHX, or Fidelity's FXAIX, all of which track the S&P 500. For total market exposure, there's VTI or ITOT, which give you access to nearly every U.S. company, big and small. If you want international diversification, consider VXUS or IXUS, which include global companies outside the U.S. And don't forget about bonds. Funds like BND or AGG can help balance your portfolio and reduce volatility, especially as you get older. The beauty of index fund investing is that it is low cost. Unlike actively managed funds that charge high fees to pick and trade stocks, index funds are passively managed, meaning they simply follow the index. That keeps costs extremely low, often just 0.03% to 0.10% per year. That may not sound like much, but over decades, those savings make a huge difference. A 1% annual fee can reduce your total returns by up to 25% or more over 30 years. So low-cost index funds put more of your money where it belongs in your pocket. Another advantage? Simplicity. You don't need to spend hours analyzing charts or reading news. You don't need to worry about which company will outperform next quarter. You simply buy, hold, and let time do the work. The market will have ups and downs, sometimes dramatic ones. But over the long run, it always trends upward. That's how wealth is built. So here's your simple formula to build wealth with index funds. Step 1, choose a few diversified, low-cost index funds. Step 2, invest a fixed amount every month automatically. Step 3, reinvest all dividends and never try to time the market. Step 4, stay invested for at least 10 to 20 years. That's it. No complicated charts, no daily trading, just consistency, patience, and discipline. Let's put it another way. Index fund investing is like planting a tree. You don't check its growth every hour. You water it, protect it, and let it grow over time. The longer it stands, the stronger and larger it becomes. Wealth works the same way. You can't rush it. You can only grow it. In 2025, with economic uncertainty, rising interest rates, and market volatility, index funds remain one of the safest and smartest long-term investment choices. They offer stability, growth, and simplicity all in one package. Whether you're a beginner or a seasoned investor, they help you focus on what truly matters. Timing the market, not timing the market. So if you want to build lasting wealth, forget chasing quick profits or risky trades. Start with index funds. Start small. Stay consistent. And let compound growth do the heavy lifting for you. Because the truth is, you don't need to be a genius to get rich. You just need a plan and patience. If you found this video helpful, make sure to like, subscribe, and share it with someone who wants to start investing smartly. Remember, wealth isn't built overnight. It's built one index fund, 1 month, and one smart decision at a time.